Okay, this is the daily money-making setups on the S&P E-mini futures using the 1500 tick bar chart and the processtrading.com right edge trading system for Tuesday, June 5th. Now, I want to start off saying, for those of you that know the system, these two bands right here are the contrabands. In other words, that's where you can take contrarian trades, and you take them according to the trade management under the processtrading.com trade management system. Since I'm doing it a little bit later after the trading day, it makes it immensely easier, simply because these bands, of course, adjust to price and the price's fluctuation. Now, during the day, this trading band was a little above right here, and this trading band was a little below down here. So where you see these two, the prices breaking these bands right here, here, and here, that means you can take contrarian trades. Well, during the day, these points approached these bands, but that price never actually broke them. And so those would have been discretionary trades. But as it is, just to simplify things, I'll go ahead and use these bands because of their accuracy to point out what the trades would have been. Clearly, the day started right over here in this time frame. Now, you don't see any professionals bars, any blue bars, as this ascended price ascended in an upward trajectory here until it got to this point right here. At this point, we see that a professional bar crossed down through the stop exit line. That's this dotted line right here. Crossed down through the stop exit line, and also that price is above the contrarian band line where you can take a contrarian trade. So according to the trade management, what you do is you get into this immediately when you have price above the contrarian band and you have a timing alert dot right here. And you place your stop limit on the prior bar. You take the high of it and you place your stop a half a point above the high. Another condition of the trade is that the high of the bar with the timing alert dot has to be lower than the high of the previous bar. All those conditions are met here. And so you can take the contrarian trade. What makes it contrarian is that price is in an uptrend, is demarcated by the process trading VWAP line. So price is in an uptrend, and we see that uptrend going on here. And so clearly we're taking a counter trend trade, and we're doing it according to trade management as well. Right here, there was a trend alert dot that says a possible trend, in this case is going to be a downtrend, could be initiated at this point. So we get in here and we enter our trade, we take it, and you could be taking it to the downside, clear down to here, depending on how you manage your trade after you get in, depending if you're trying to take 2 points, 6 points, 10 points, however your risk management is leading you. But this is where you would get into the trade, and you can see the effectiveness of that. So then you can then go over here, and at this point, there's another counter trend trade accordingly, because price has hit the contraband. There's a timing alert dot. The low of the bar with the timing alert dot is above the low of the prior bar. So you can take that. Also, what is good in taking this trade is that you have a white band here within the gray band. So it is this gray band that says price is now in a downtrend. That's what makes this a counter trend trade. So you take it up to here, and then you see the yellow bars here, which are the less skilled traders getting caught thinking that a price is going to continue up, which it does over here, but this is not the right time for that. And then they just get caught wrong-footed and price goes down again. And you can see that with the professional bars under the stop exit line here and here. Then down here, you have the same situation where you can take a contrarian trade. The contrarian trade here, again, is to the upside, and it is supported by these two trend alert dots here. Plus you have a trend alert dot here and a trend alert dot down here on the cinnamon oscillator. So these are the discretionary indicators. You can see that supply is starting to weaken and demand is starting to come in. You can tell that by the gray bar right here within the red bars. Then you get the trending alert dot. You can see that on the cinnamon oscillator, the momentum is coming up through the bottom and now is cutting across the sentiment line or the conviction line. And the conviction of traders now start to turn up and take it into a positive direction. And here we see a large amount of demand coming in, shown by the green demand bars here. So you would have got in here. Now, one place that you could have taken a trend trade, it's kind of hard to see, but the process trading VWAP here is gray. So that means that you can take a trend trade to the downside anywhere there is a timing alert dot above the price bars. And here it is. It's hard to see because it's right on the process trading VWAP line. But you use your trade management, which says you take the low of the bar with the timing alert dot, and then you place your order entry 2 points below that low, which would have got you in right here, and you would have been further convicted to the trade because of the pro bar that came down right below the stop exit line. So you would take that down here to this contrarian trade right here, and then with all the evidence that it's going to reverse and go in the opposite direction, you would be out. So that's all I want to point out for today. You have several contrarian trades here and here, here and here. You have one trend trade here. I think that if you watch all these videos, you're familiar with the processtrading.com indicators. This is the Intergy indicator indicated by green demand bars, and the gray bars show weakness whether they're in the green or the red, and the red shows supply. Down here is the unique cinnamon oscillator, which tells you both momentum and conviction. And of course, momentum moves much quicker than conviction, but conviction is much more steady and doesn't turn as quickly. So as you can follow the slope of the conviction and know essentially how price is going to trend. And this is the short-term trend oscillator down here with the pullback line. You can see that price came to here, hit the pullback line, and then kept going in that trending. You can see here, price goes above the pullback line, then it hits the pullback line and goes back up. And then it hits the pullback line here, goes slightly below, and it goes back up. So this pullback line is not just a midline, it actually is the pullback line, and you want to read it as such to see whether it's going to break it and continue down, or as it does so often, just serve as a pullback. That's in that pullback essence. That's how you know that price up here isn't continuing, because it's at a pullback point. And price here and here aren't going to continue down because they're at a pullback point. If they're going to continue down, they're going to break that pullback and then keep going down. But you're looking at the probabilities here, and then you're reading it along with the other discretionary indicators, which shows conviction and a large amount of demand coming in. So that's it for June 5th here, and we'll catch you on the next daily money-making setups. So if you want to get that, just subscribe here or head on over to processtrading.com. You can see how the whole system works. Everything's documented over there, kind of interesting. And at the bottom of the page, there is a contact form. So if you have any questions about the system or any of the indicators or the trade management part, just put in your email and your comment or your question, and we'll get back to you. So hope your trading is good for tomorrow and the rest of the week, and we'll talk to you next time.